All right, Ferrari Race. The legendary prancing horse has seen some fascinating price action lately, with a recent breakdown that has everyone talking. Is the bottom in for this luxury powerhouse, or is there more road ahead for a bumpy ride? We're about to deep dive into Race, breaking down the fundamentals, crunching the numbers, and, as always, looking at what the charts are telling us. So, what's the buzz around Ferrari right now? The market narrative is a tale of two halves, but leaning towards a very strong long-term view. On one hand, Ferrari boasts unparalleled brand strength, an exciting product pipeline, and an order book that gives them incredible visibility all the way into 2027. We're talking about the highly anticipated Ferrari Elettrica and a slew of other new models that are keeping demand red hot. However, management has been cautious, noting macroeconomic uncertainties, which has tempered some enthusiasm. And our technical analysis shows a recent breakdown from consolidation, hinting at some near-term headwinds. For those new to the track, Ferrari NV isn't just about selling incredible sports cars. They design, engineer, produce, and sell luxury performance vehicles, sports, GT, special series, hypercars, one-offs, and even track-only machines. They've got racing cars, spare parts, engines, and a whole ecosystem of after-sales, repair, maintenance, and restoration services. Beyond the vehicles, Ferrari licenses its brand for luxury goods, runs theme parks like Ferrari World, and operates direct sales through stores and their website. Founded in 1947 and headquartered in Maranello, Italy, Ferrari is a global icon of luxury and performance. Now, management, while very confident in their strategic plan and adaptability, is also sounding a cautious note about the uncertain macroeconomic environment, ongoing geopolitical tensions, and market volatility. All right, let's get into the engine room, our scenario analysis. First, how do we reconcile that strong market narrative of incredible brand and product pipeline with management's cautious tone? It's simple. Ferrari's execution remains stellar, and their unique brand allows them to navigate challenges better than most. However, external macro factors can still create turbulence, which is why we build out different scenarios. Let's break them down. First up, our base case. This assumes Ferrari keeps executing at a high level, leveraging its iconic brand and a fantastic product roadmap, with 11 out of 15 new models already launched. That order book visibility into 2027 gives us real confidence in consistent revenue. We're looking at a projected 15.03% EPS growth over the next 5 years, which is robust, even with those external risks. Our current EPS, TTM, is $9.69. Projecting that out, we get an estimated EPS year one of $11.14. We then apply a premium PE multiple of 42.05, reflecting its luxury status and stable growth, giving us a fair value of $468.61. I'm assigning the base case a 40% probability. While it's a strong fundamental case, the recent technical breakdown we've observed introduces some near-term uncertainty, pulling its probability down slightly from a purely fundamental perspective. Next, let's talk about the bull case. This is where everything goes right. The global economy accelerates, consumer confidence soars, and demand for luxury vehicles goes through the roof. Ferrari's new launches, especially the Ferrari Elettrica, blow past expectations, driving higher average selling prices and expanding margins. Operational efficiency and a stable supply chain kick in, leading to faster than anticipated earnings growth. In this scenario, we take that current EPS of $9.69 and project an accelerated 20% growth for year one, landing at $11.628. Apply a higher PE multiple of 48, reflecting market enthusiasm, and we get a fair value of $558.14. Now, I'm only giving the bull case a 15% probability. Why so low given the upside? Because, as our technical analysis shows, the stock needs to clear substantial resistance at $488.50. And its current breakdown makes this scenario much less likely in the short term without a strong, unexpected catalyst. Finally, we have our bear case, which is what management is cautiously alluding to. This scenario assumes that the uncertain macroeconomic environment, ongoing geopolitical tensions, and market volatility truly bite. Demand from high-net-worth individuals could soften. Trade tensions or currency fluctuations could erode margins. And delays or higher costs for the Ferrari Elettrica could weigh heavily. Supply chain disruptions could also resurface, hindering production. For the numbers, taking the current EPS of $9.69, we project a decelerated 5% growth for year one, reaching $10.17.45. With increased risk and slower growth, we apply a PE multiple of 35, giving us a fair value of $356.11. I'm assigning the bear case the highest probability, at 45%. This is crucial. I'm giving the bear case a higher probability because our technical analysis strongly supports this. The stock just broke down from multi-week consolidation, and we've identified immediate support levels at 393 and 351, suggesting significant downside risk is quite plausible. All right, let's pull up the chart. Here's what I'm seeing from our technicals team, and it's pretty clear. Race has just broken down from a multi-week consolidation, which is a bearish signal. The next immediate supports are at 393 and then further down at 351. To change this trend and really start an uptrend, the stock needs to maintain above the resistance level of $488. So, right now, the technicals are flashing caution, emphasizing that downside risk. So, after putting it all together, the incredible fundamentals, the potential growth scenarios, and the very real technical warnings. Is the bottom in for Ferrari race? My verdict is not yet. While the underlying company is absolutely a powerhouse with a compelling long-term story and a base case fair value significantly higher than current prices, the technical breakdown and the higher probability we've assigned to the bear case suggest that we could see further downside. The strong fundamentals are compelling, but the current technical posture and macroeconomic uncertainties dictate patience. Given our bear case fair value of roughly $356.11 and those critical technical support levels we've identified at 393 and 351, these could be very interesting zones for potential entry. I'd be looking closely at the 393 level for any signs of a bounce, and definitely keeping a watchful eye on 351 as a stronger potential area of value should the bear case play out. Remember, dollar cost averaging into positions around these levels, if they hold, could be a smart play. All right, if you found this breakdown on Ferrari helpful, do me a favor, smash that like button, subscribe to the channel if you haven't already, and hit that notification bell so you don't miss our next deep dive. Let me know in the comments what stocks you want me to analyze next. I am not a financial advisor. This is not financial advice. All information presented in this video is for educational and entertainment purposes only. Investing in the stock market involves substantial risk. Always do your own research and consult with a qualified financial professional before making any investment decisions. Past performance is not indicative of future results.